We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up USD, SGD. We are on a 12-month time frame. Price action, last candle to the right-hand side is a bearish red candle. We do have price action overall, lower lows, price action overall, higher highs, midpoint, also adding second level lows, third level lows, and fourth level lows. Take a look at that price. So current price is sitting at 1.32389. So if price work his way up, it can tag that resistance right above at 1.32636 before tagging the next area at 1.46835. Before tagging that area, it can tag that midpoint within that area at 1.39980. Price action drops down, it can drop down to the overall lowest structure at 1.22063 before tagging that midpoint at 1.27096. Also, let's tag the midpoint right between the numbers we just read and that midpoint, right below price at 1.29959. Let's also tag another midpoint right above the resistance white in the midpoint, nearing the numbers of 1.36580. So let's take a look at what's going on. So if price action pushes up from this area, when we receive that incline, then that means we're looking for the engulfment to the last few candles in the market, which would be price second, third, fourth, fifth, sixth, seventh, the last candle. And we look at that market to engulf and push up. So let's take a look at what's price coming from. So price started off at a high, broke down, retest, pushed down further. So it did an overall spike down towards that low. On this chart, he is identifying as a single bottom for that first, second, third. We have the engulfment, looking for the engulfment towards the last few candles in the market for that market to push up for that double bottom. Or that market can consolidate, and if it pushed down further, market's coming from a overall, when that market did start off at that high, it broke the midpoint, came back to retest that midpoint, received that push. So that area will be identified as the first, second, third, get the engulfment, market's coming down from that double top. If we receive the break, we're looking for the break to retest for that market to drop down further. Working our way to the 6-month time frame. So price action on the 6-month time frame is reading as a bearish red doji. So it's a retest. So it could either retest and respects that area of support just like the previous side and work that market fully up and out that area. If we take a look at how many times that market did spike those areas of lows, we have 1, 2, and if this area is respected and it follows up with the bullish green candle, this will be the third time. So if you ask yourself where price is coming from now on the 6-month time frame, it's coming from the low, which identified as the first, second, third, fourth, retest 1. So we have a triple bottom it's coming from, and the market came back to retest again once, twice, 3 times. If that market push up, it's coming from a triple bottom and a triple retest. And you also can read it as another pattern. So I'll show you guys here to the left-hand side of price. When that market did dip, we did receive candles that spike up to the high, which was a break and retest, identifying that market may drop down further than it did. So you can think of this area as like a left shoulder, and we have an overall triple head, and we have a triple shoulder and we're going to see if that market is going to push out that area. So it's like a head and shoulders pattern, overall triple bottom, spike down. Working our way to a 3-month time frame. Price action 3-month time frame, reading the same thing. Bearish red doji. Is it respecting for that market to push up, or if it breaks with this doji, that doji is just a retest. So it's identifying a bearish red candle, breaking down, retesting, and it can follow up the bearish red candle to drop that market down further. And if it does, then we ask ourselves where market is coming from. 1, 2, 3, 4. We have the overall first, second, third, fourth, retest 1, retest 2. That's why price action is a doji, because a retest, if it receives a push, you'll see that market come down from a triple top and a retest, or overall quadruple top. Working our way to the monthly time frame. So price action monthly time frame, reading is the same thing. Bearish red candle, doji, spike down to a low. You can see that long wick down to the bottom. So it's either breaking, identifying a break and retest, or is it respecting that support to work its way up? But so far we do know it's on that zone, a little bit above, a little bit below. So we are in the zone area. So as we walk down the time frame, we'll see what's going on. On the weekly time frame, we start to receive bullish green candles. So to see if this market is going to push up, you're looking for a price to at least break the second to last candle in the market midpoint, and then we're looking for a break and retest. So it will identify as an overall first, second, third. Once it breaks through that resistance line and retest, or identified as a retest candle, and you'll see that double bottom. Unless you receive a single bottom, market just push right back up to the midpoint of the resistance and the overall support of that area. Working our way to a daily. Price action on a daily time frame, reading as a bullish green candle, spike down to a low, same as second to last candle, spike down to a low, and the same as the fourth to last candle. So that market is identifying, it is touching those areas for the support, but at the same time it is touching those areas of the resistance. So that's why we receive that consolidation. There's a pattern forming that area. So if it's respecting, we're looking for the breakout in that market to come back up through that resistance line. So we'll identify as a first, second, third, and market pushes up for that double bottom. Or it could just be identified as an overall break and retest with the price action candle. So it's identified as a break, a retest, and if we receive the engulfment to the downside of at least that second, third, and fourth to last candle, at least the fourth to last candle body, we'll see that break and retest. Headed down to the 4. Okay, now we're on the 4. Let's add our zone a little bit above price, a little bit below, so we can take a look at what's going on in that zone much clearer. So a little bit above the zone, a little bit below. So we can see what happened. The market did break below that zone, identify that first, second, third, fourth, and you see the retest with the second last candle, price action bullish green candle, but didn't engulf the second last candle yet. But if it does, it'll engulf the second, third last candle, which go into that zone, and you'll see that double bottom and a retest. But so you can see that price action is just tagging that zone once again. So we're waiting to see if that market's going to break back in, or is just identifying another break, retest, push, retest, push, retest, push, retest, and it's going to push back down. Or is it going to break into as a break, retest, and walk itself right back into that structure? Also is identifying some type of double bottom. We'll talk about that in a 3-hour time frame. So we can see that incline double bottom. So there's an overall double bottom for that first, second, third, fourth, and that's why we're looking for that break retest. But then you see right below price, we do have that coming down in red for that first, second, third, fourth, retest 1. So if it breaks through, it'll be a retest, and we'll get the second push near to the midpoint area. But you can see price action is entering that area, but price and second is identifying it may be a reversal. So what you're looking for is an engulfment towards the third last candle in the market with a price action closing out above that body, and that'll identify as a break and retest, and you'll see that push in that area. USD, SGD, exotic.